Hi, welcome to this video today, which is on the 2nd of May. We're on Sunday. We're just going to be looking at trade entry techniques to get in to blow off moves. Now, blow off moves are when you get a strong move on high volatility, either up or down, and you want to go contrary to the prevailing trend. Now, in terms of these types of trades, all traders think they're really high risk. I personally think they're very low risk against the potential reward. Obviously, if you time your entry correctly and you use correct money management. Now, in terms of trading blow-off moves, we're going to look at three pairs today. We're going to look at USDCAD, EURCAD, and GBPCAD. Now, the CAD has been the strongest of the majors over the last week, and I personally think we are going to get a reversal. Now, we're going to go and look at the trade setups, but just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, including the three we're going to look at right now, you can click on the link beneath this video and you can get live access to our member center. You can also check out our Recommended Regulated ECN broker. Follow us on our Facebook page and join our Facebook group of traders. Now, in relation to the first pair we're going to look at, it's going to be USDCAD. So let's go over to the chart. Right, on USDCAD, the daily chart, and in terms of, I've made a note up here, we're trading above monthly support at 122.50, but only just. We're at 122.78. But I'm looking at this selling to be, or the selling to exhaust, and a nice move to the upside. I'm going to do my technicals in a moment. Just go through these general rules I've written up. There's 4 simple rules, okay? Now, in terms of your trading big moves, big spikes, you want to know what's behind the spike. And just over a week, the CAD has pushed the USD down by over 300 pips. Why has the CAD been so strong? I've just written up some notes here. We did have a hawkish Bank of Canada. That's on that red candle there, okay? It revised up its view of the economy going forward. It cut its bond buying program and said it could raise interest rates next year. And the market reacted to that and pushed the USD down. But the bank said its view could change in line with market conditions. Obviously, you're looking a year ahead. A lot of things are going to change. I don't see how anyone can look a year ahead in the markets, but central banks do. I think if we look at the big picture of what's going on in the Canadian economy, I've just got this quote here from the Canadian Imperial Bank of Commerce, and I really like their insight on the Canadian dollar. They put with the third wave, that's obviously of COVID, forcing fresh shutdowns across Canada, the economic performance gap to the US is set to be magnified in the coming months, as the US is miles ahead of Canada in terms of fiscal stimulus, vaccinations, and reopenings. That's true, you can see it in the data. That will translate into a later closing of economic slack in Canada, even with an acceleration in growth over the summer months as consumer spending surges upon reopenings. If you look at the big picture, the US economy is doing better, but you do have a dovish Federal Reserve. They do not want to raise interest rates. And we had their meeting last week, which gave the CAD the opportunity to push the dollar down a bit more. They said they're in no hurry to raise interest rates. They believe that inflationary pressure will fade. I'll cover this in my weekly forecast tomorrow. What's important is bond yields in the US. Bond yields are firm. They're pretty firm. If bond yields rise, the USD will rise from here. Okay. Now, in terms of bond yields, they point to higher borrowing costs. Okay, I'll go through this in my weekly forecast if you're unfamiliar with bonds. So we think the market isn't going to believe the Fed and the inflationary pressure will fade. But it was a dovish Fed. That's in the price now. Speculators have sold. And we can see that in the COT net traders positions, which is our favorite sentiment tool. Speculators sold heavily and commercial hedgers bought last week. And the data only goes to Tuesday. So basically Friday, Thursday, Wednesday, Tuesday. So here, okay? So speculators were sold even more, and hedgers, commercial hedgers with the smart money, would have increased their buying. Okay. Now, in terms of CFT net traders positions, if you're unfamiliar with them, you can just go and look up our videos on how to use them. Okay, but they're a great sentiment tool, totally free, come from the CFTC. Okay, so we're looking for an exhaustion of selling and to go long of the USD. Now, in terms of general rules of trading, exaggerated moves up or down, all we want to see is high volatility moves, obviously, and moves outside of outer Bollinger Bands. Now, Bollinger Bands, you can see them on the chart. Two orange bands are the outer bands. They're two standard deviations from the mean, which is a 20-day moving average. And they, when they widen out, indicate high volatility. You can see they're wide there. Now, if you go back and look at Bollinger Bands, you'll see on high volatility moves, when you get outside of the outer Bollinger Band, you will tend to come back within pretty quickly. Of course, you can run on, but come back in pretty quickly and target the mean price. So revert to the mean. I'm not looking for prices to go here. I'm looking for them to go higher, actually. But in terms of what I got next, reason for the move is the good or bad news priced in. Personally, from this summary, I think the bad news is in for the USD. Speculative positioning. We know speculators are heavily short. We want to see price velocity and volume. And it is an aggressive sell-off. The last two candles, not too much volatility. We made a new low on Friday. No volumes, no big volumes. Looks like the sellers are all in. Now, say here, we want to use round numbers for entries and stops. Round numbers are very important because that is normally where the big institutions will do big order flow. Okay. Now, in terms of the technicals, pretty simple. Just going to do that. It's indicating the low there. And basically you settled at the previous close. Where would you go long if you wish to do so? You want to go long, in my view, here. Okay, so there's your round number, which is 123. You want to get through that round number. I think 123.30, give it 30 pips clearance. There's normally a big battle between buy and sell orders around round numbers. If we get above 123.30, we should go to the upside. Where could we go? Well, you've got the mean price here, round number, which I think we should get to. And then I think we should retrace the whole exaggerated move to the downside up to here. Where would you put your stop? At the moment, I would say the stop can be back, well clear. Well clear of monthly support. So you could be behind the 122 round number. Okay, and if we break higher and you get nice blue, you just tuck her in behind the tail low here. So let's say 122.30, and then look for her to run to the upside. It's a simple trade setup. It looks, if you just look at it purely technically, you probably say, well, big downtrend is probably going to continue. But you've got two low volatility candles here, not much volume. And we know what's going on behind the chart. So looking for a rebound. We shall see. I'll update it when I do my weekly forecast tomorrow. See if anything happens when we open the new session of the week. Now I want to go next and look at EURCAD. Right, we're on the EURCAD daily chart. I just made a note in relation to both the euro and the GBP against the CAD. What we had on Friday was the USD was firm, both the euro and GBP, but it wasn't on the CAD, was it? It was red, and that's given a big candle to the downside in both the euro and the GBP, which spikes us outside of the outer Bollinger Band. Now, in terms of this trade setup, your support level is there. Okay, so daily chart lows. If we were to run on to the downside, okay, go through the level, we would just look to buy back above the level with a stop behind the next round number down, which is 146. Okay, now what happens if we don't run to the downside? We're outside the outer Bollinger Band. What if we come back within it? Well, the level of resistance is at the round number 148. So you could go 148.30, stop behind this level. I'd get just back behind the 147 level. Let's say 147.60. If you get a nice blue, you can bring your stop up. You obviously got to manage the trade as it goes. But this, I think, is going to blow off. Either we will go through there and come straight back, or just basically reverse up through the 148 level. Where could we go to? Well, there's resistance at 150, which is roughly in line with the mid-Bollinger Band at the mean price. But I think we could run a little bit higher. I think we could go up there. So basically to the two bodies just below the 152 level. So I really like the look of this trade from a risk to reward point of view. All right, let's have a look at the last chart, which is going to be, sorry, was it? It's GBPCAD, sorry, which is a very similar setup. Let's go and take a look at the chart. Right, GBPCAD, and this is the biggest fall in terms of the three pairs that we're looking at today, and a big spike down on Friday outside of the outer Bollinger Band. How do we want to play this one? You probably guessed already. There is the round number 170. Just get back above it through the outer Bollinger Band, say 170.30. What about stop placement? Two bodies over on my left here. I'm going to use, which just above the 69 round number, so stop should be back behind the round number, say 168, 60, 70, 170, 30 entry, see if she runs. Now, where could we go to? Well, I think got the mean price there. Okay, 20-day moving average, or could go here. We're extremely pound bullish, which I've longer term, which I've noted in the member center. I think the whole exaggerated decline could be retraced, but I think we will get a reaction. Okay, and it should be a decent reaction to the upside. Now, in terms of the three pairs, which is the best? Well, yeah, I know a lot of people are not bullish of the USD. We personally are, so we like the look of USDCAD. If you're not USD bull, you would favour either Euro or GBPCAD. Okay, I just like the look of all three. I like these big moves outside of outer Bollinger Bands, because if you look back historically, if you've got the bands really wide, a big exaggerated move, you normally get decent retracement or even a really good retracement. And you normally get a result pretty quickly in these types of trades, right or wrong. And I hate sitting in trades that just don't do much, because your equity is not working for you. I will update these three pairs in my weekly forecast tomorrow. But that is the video for today. Thank you very much for watching it as usual. Take care. Have a good day.